The biggest myth in real estate is ignore market timing. You can never predict the market. Just buy any time that you can and hold it for the long term. It's all about time in the market, not timing the market. Now, I'm going to share with you in this video why I think that's incorrect and why you should consider both timing and time in the market. And that's how you accelerate your wealth in property. Make sure you stay tuned towards the end of this video because I'll be showing you the golden nugget that I've used in my property investing journey that's really accelerated my results, and I'll give you some data to support that. So hopefully it'll help you investigate the truth of how you can make more money in real estate much quicker and with less risk as well. Let's go right into this video. So have you heard of this saying before? Just buy anything you can, hold it for the long term. It's all about time in the market, ignore market timing. You can't predict the market in real estate. Now, to a degree, I do agree with that. You know, it's all about buying the best asset you can and hold it for the long term. Now, what I don't agree with is you ignore market timing completely, because in fact, you can predict where future growth is. You can time the market to as close to the bottom of the market cycle as possible so you can pick up the upturn, because you can use data and you can look at mean reversion, you can look at other analysis. Because for example, if you bought Sydney at the peak of 2002, that's when it went up so much, and you held it until 2012, you would have made below inflation, circa 2%. Okay, so even though Sydney people claim, oh, it's the best city in the world, why don't you invest there? But if you pick the timing wrong, you're actually robbing yourself of growth and wealth creation potential much quicker if you have timed the market well. Now, conversely, if you bought in Perth or Brisbane in the same time period, you would have doubled or tripled your money easily. Now, it's because of market timing. So the biggest caution that I like to urge you, and I'll share with you a story, is because I remember I went to this, all these webinars, seminars of buyers agents, like real estate agents, doing the thing. It's pretty awesome. I love learning. And they're always saying, just buy what I have, buy in Melbourne, buy in Sydney, buy this, buy that. Because it's not about timing the market, just getting now because that's how you get rich. Like, how many of you have heard of that before? And I remember falling for that trap. I signed the contract, it was a peak of the market in Melbourne, for example, and I thought that person was on my side as a mentor. However, they were working for a developer. They're selling me brand new apartments and townhouses, and I thought it was great, house and land packages. And so luckily I got independent advice from that, and I rescinded the contract, I cancelled it and got my deposit back. And that was a close call because I looked at the data and it hasn't grown much for 5 years. And so it's very, very important that you really be careful who you listen to. Remember, the real estate industry, it's filled with transactional professionals. And what I mean by that is, if you ask a real estate agent, should I buy your property, what you have? What do you reckon they'll say? They'll probably say, yeah, Matthew, this property is great, it's gonna grow, growing area, infrastructure changes, all the spill. And it's because they get paid when you buy the property. Yeah, that's a no-brainer. Now, be careful of buyers agents as well. Now, I'm not saying they're all bad. I really like the industry and I think they're doing a great job. Just be very careful when they recommend properties to you as well, because they get paid like real estate agents when you buy the property. Have you ever thought about that before? Even though they're clicking on your side, but they still have a financial incentive to sell you the idea to get into the market, to invest your money. So, in my opinion, no one cares about your finances more than yourself. What if right now isn't the best timing to get into that particular market that the buyer's agent or the real estate agent is kind of pitching you, right? Really, be very careful of time the market. It's all about buying the right market cycle. You don't want to buy a property and it hasn't grown for 5 years, because that will really derail your wealth creation journey, and that's why most people get stuck on a small amount of investment properties. So be very careful who you listen to. Remember, they have a financial incentive to get you to buy, and we're gonna look at a holistic data and also your personal circumstances, because it's all about creating your own strategy rather than following what other people are doing. So a really great example of me using a personalized property strategy that I've developed for myself. So I don't listen to anyone else, I just formulate it myself because I know my income, I know my risk appetite, I know what other properties I do have in my portfolio, so I know what works best for me. So I bought a Brisbane house in 2018. Now for those who remember back then, or if you're in the market at all, no one was talking about Brisbane. It was like a ghost country town. It was like doing nothing for 8 years, and people thought it's a dead city, don't buy there, you're gonna lose money. And everyone was celebrating, oh, Sydney, Melbourne's done so well. You know, I went against the crowd, as Warren Buffett said. Be fearful when others are greedy, and be greedy when others are fearful. And so I went and bought in Brisbane because the data stacked up well, you know, the incomes were growing there, there's finally infrastructure changes, the Queen's Wharf, the second runway in the airport. There's so much jobs being created in Brisbane, it's just changed completely. And that's when I thought in terms of market cycle. Well, Brisbane's done nothing for like 8 years, but it killed it in 2000, 2010. Then the cycle should repeat itself here because of the basis of mean reversion. Okay, look at mean reversion if you don't know what that means, but basically every asset should revert back to the mean average return, which is circa 7 to 8% in real estate. So I bought that, and guess what? In 2020 to 2021, in about a 1 year period, I made about 50% in 1 year. And I couldn't believe how much money I've made in such a short term. And also Brisbane has the fundamentals long term as well. But if I had bought it again, let's say in Sydney in 2018, you know, I would not have made as much growth as in Brisbane over the next 10 years, because remember, it always revert back to the mean. Nothing goes up for 10% per annum for forever. It has to go back down to the mean. So be very, very careful of where you buy and who you listen to. Remember, no one cares about your finances more than you, and that's why having a personalized property strategy that's designed for your income level, for your risk appetite, for your personal circumstances, having the tools to create it yourself, that is so powerful compared to just relying on other people who may or may not have the financial incentive to sell you and to get your money to put into the market, because that may or may not be in the right interest for you. Okay, so if you want to figure out how you can select the right properties, click this video up on the card above, because I'll be sharing you some data points, some considerations where you can make more of an objective view of how to buy properties. I'll see you on that video very soon. Thank you for watching.